Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Scarlett Fu with Alexis Christophers, and we're joined right now by Bloomberg's Christina Aquino, and we got to start with Oracle.
Yeah, we got to start with Oracle because that is a hot stock today, ticker ORCL. Those shares are up nearly 40% now, which is astounding, and that is because it did give a bullish outlook for its cloud business. So it's saying that after the fiscal 2026, its cloud infrastructure revenue will increase subsequently over the next 4 years. So we're looking at $32 billion after fiscal 2026, all the way up to $114 billion in just 4 years after that. So very, very bullish. And the company also saying that they signed a bunch of data center deals over the summer, including one with OpenAI. That has increased their remaining performance obligations, which is a key metric, to $455 billion. So
almost half a trillion.
Exactly. And Bloomberg Intelligence citing that as a reason for the bullish outlook on the stock, because they're pointing out that that is almost 4 times the size of a similar measure for Google. And so that really puts Oracle's cloud growth rate on track to surpass Google's.
Now, on the other side of that coin, we've got Synopsys, right? Worst performer in the S&P 500, missed earnings badly, and investors are punishing the stock.
Absolutely, Alexis. A Synopsys, ticker SNPS, doing really quite the opposite of Oracle. Shares down about 33% at the moment. That's set for its biggest drop since 2004. And that is, in fact, because of a weak set of earnings, particularly a weak reading on its revenue from design IP, also weaker than expected earnings outlook. And of course, the company warning that export restrictions are contributing to a slowdown in China, which is, of course, a key market for the company, a key market for anyone trying to be in the semiconductor space. We've seen a swath of price target cuts. So they've been cut to $550 from $660 at Needham, $550 from $650 as well at Stifel, and Baird analysts downgrading the stock to neutral, saying that there is a lack of forward visibility.
And finally, you're looking at banks. Speaking of visibility, we want to get some visibility on these banks and their exposure to certain losses.
Absolutely. So we're looking at Fifth Third at the moment. And so, yeah, that stock, FITB, currently flat. It was gaining a little bit more earlier. But as this comes as our just investors digesting the news with Fifth Bank saying that it was the victim of a fraud on a loan with a $200 million balance, though they're saying that they believe it was an isolated incident. So, they didn't disclose the borrower, but Bloomberg's own reporting showed that Fifth Third is among the banks bracing for a potentially hundreds of millions of dollars of losses from loans tied to the subprime auto lender Tricolor Holdings. So other banks that are involved in that mess is basically JP Morgan, Barclays. So these are no names that are involved in this. So this seems to be quite a big loss, because $200 million just for Fifth Third in terms of impairment. So imagine how much it's going to be for the other banks.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.